Investing specifically in single stocks can kind of be broken down into three categories. On my channel, I've talked a lot about what I would consider the first and third categories, those being both the actual selection process where I go through, find companies I enjoy, and then select, and then the third process, of course, being when to sell said companies or positions in your portfolio. One I haven't necessarily touched on as much that I think is one of the more misunderstood concepts is actually this middle period where we're holding on. See, a lot of people, they think that they need to do some sort of maintenance with their portfolio, and oftentimes one of the things everyone kind of clues in on and focuses on is quarterly earnings reports. And with ASML giving their earnings report today, I thought this was a great chance to kind of go over both ASML's earnings, my feelings on earnings in general, and then also talk to you about some proposed legislation that might come into place that actually eliminates quarterly earnings entirely. So, without further ado, we'll start at what is ASML? Now, for a lot of you, you may likely know what ASML does, but I wanted to pick a company that I'm already invested in so I can kind of walk through what it is I'm looking for in an earnings report. Now, ASML, for those of you who aren't aware, is one of the more important companies in the semiconductor space as a whole. Basically, they are the masters of all things lithography. Now, lithography is, in essence, getting giant lasers to cut incisions into your semiconductor chips. That is the Spark Notes, not super techy version. More they do like they have little tin and it'll like actually liquefied tin and they will shoot their lasers through it. Specifically with the EUV, it is 13.5 nanometer lasers. It's like the smallest lasers you can get to before you're working on semiconductor chips that are actually at atom-sized levels, but they are the only company in the world that can do this advanced EUV lithography that is currently an essential step in semiconductor construction, specifically for the most advanced chips as we get smaller and smaller and smaller chips. So a bit over a year and a half ago, I was really looking into ASML because they were having not exactly the best 2024. And a lot of that came down to geopolitical risks, specifically with China. They were a company getting swept in the we don't want to sell to China, we're not being allowed to by our government, etc., etc. And this was absolutely tanking their share price, and this was something that I thought was more of a temporary thing, so I got in at a great price with ASML. ASML was a business model I really liked, and of course, I'm always looking to invest in monopolies, especially when they're essential and advances, so ASML made a lot of sense for me to make as an investment. And since then, I've done a fair amount of research keeping up with them, but I'm somebody who, if you look back at my earlier videos too, I always promote this. I like to front load a lot of my research, and so when I get to these quarterly earnings reports, they aren't so much trying to see what exactly it is, and I'm worried about if they beat analyst expectations or not, or how their EPS is doing in this quarter versus this quarter. That's not really something I'm doing. I'm more just trying to make sure if my thesis is imploding. But anyways, I'll go through a little bit of ASML's earnings and I'll talk to you about what I would say are my biggest takeaways looking through an earnings report like this. So what I've gone ahead and done on screen is I've actually just kind of gone and put some of their slides ahead into this so that we can kind of see how they are presenting this. So right at the front, if we look, they report 7.5 billion total net sales and 2.1 billion net income in Q3 2025. This was actually a slight beat, and this represents for their full year expected guidance a sales growth of 15% and gross margins around 52%. Now, for me, it wasn't necessarily a major part of my thesis, but a decent part of my thesis was they are going to be able to continue to hit their guidance expectations. And we'll get a little bit into their 2030 goals and where they want to end up. But so far, this is very much on pace with this. So this would be a little bit of something that I would feel pretty good in continuing to hold. Now, they put a little bit of their expectations first in terms of AI and the semiconductor space. They're expecting the AI semiconductor industry to surpass $1 trillion in revenue by 2030. A lot of their targets being in 2030. We'll continue talking about that. They also say the industry will require major innovations to address AI power consumption and cost challenges. That's something that they've really put an emphasis on, and I think they're being a leader in the space. Again, we're dealing with a monopoly, so there isn't any other competition. Love to see it. Our flexible and versatile portfolio is well positioned to address all customer needs as we extend holistic lithography to 3D integration. They actually are shipping one of their first machines for this. Improved DUV and then EUV. And EUV is going to be their segment where they are a monopoly. There are some players in DUV, but they really emphasize this growth in EUV because it is really the next step, basically before we have to get to quantum. But that's a story for like a few years down the road, like a little bit ahead. And then, of course, we get to their 2030 expectations, which played a large part into my investment thesis. So, based on different market and lithography intensity scenarios as presented during our Investor Day in 2024, we see an opportunity to achieve 2030 annual revenue between approximately 44 and 60 billion, with gross margins between 56 and 60%. So, they're looking to both almost double their revenue and in essence become even more efficient as they're doubling their revenue. And they still think that they're going to hit that. Both the release where they had like their CEO give an interview and then this little PowerPoint, they're both saying, hey, we're still on track for this. So overall, these are the things that I'd be looking for, just making sure they aren't like falling off the rails. Now, next thing of utter importance is going to be their little breakdown. So we have their total sales, their net system sales, installed base management, gross margin, operating, all of the things you can read on screen. Now for me, again, quarterly earnings kind of play the part of just trying to make sure it doesn't blow up. So these things aren't going to be of the utmost importance unless they gave like promises that they weren't able to keep, or if I'm seeing any red flags. And currently, this is something where I'm not necessarily seeing any red flags. Now, another thing ASML has done a lot of emphasis on that I actually really liked, and it's done something to actually make me maintain being a shareholder with them, is they really want to give back to their shareholders, and they emphasize this. Being in a tech company, you have to do a significant number in R&D. So basically, the way I thought of this, and I've explained this to other people with ASML being a monopoly, they are basically, if you take a track, right, and you have Usain Bolt, and he's running against nobody. R&D in this place, or research and development, basically makes it so that Usain Bolt's starting line keeps on getting closer and closer to the finish line. And so with EUV being like probably one of the single hardest, most complicated things in the world and most advanced, we've been able to push that starting line significantly closer to the finish line so that even if competitors start trying to pop up in EUV, they are so far behind. Is actually crazy. So with that, they're actually able to still do R&D, maintain their position, but also return cash to shareholders. They understand, and they have already done partnerships, and they have so much money that they're actually able to return cash to shareholders, which I love to see. And this isn't something that is a burden on them. They don't have a horrible payout ratio. This is just an added benefit. So these are the types of things I would look for if receiving dividends is a part of my thesis. I would want to make sure that they still have a sustainable dividend, and they definitely do. Also, another thing I'd be looking for, share buybacks. I love when we can cut out more and more shares and give me a bigger piece of the pie. I love that. Everything on there is on track. And then here's a little bit of their guidance for Q4 2025. They give a little bit of their ranges for their total net sales, gross margins, R&D, all of the important metrics. They have actually come out and said that they are really expecting to have a major Q4 in 2025, and that's something I'm quite excited for. I think we'll probably see a significant amount of price run up prior to Q4 earnings, which is natural because it's supposed to be a big earnings, and I'm excited to participate in that. And also, gross margins look to be around the same, and 52%, that's pretty solid. So, overall, expected total net sales growth of 15% for the fiscal year 2025. These would all be things that are just confirming my position. Again, not seeing a lot of red flags. So, overall, I've walked you through a bit of what I would look for, specifically breaking down ASML's earnings. So, I go back to my thesis, and this also breaks down with when I would actually part with a position. Now, I'm someone who really does not like investing for short periods of times with companies. I just don't think it's the ideal way to invest. I'm somebody who really prioritizes long-term compounding, and so I'm going to try and make sure I can make partnerships with these companies that are going to be high performers, not only in their share price, but also maintaining their spot in their business models, maintaining their margins, being accredited to shareholders, things of that nature. And so again, I know I'm reiterating a little bit, but when I go through an earnings report, typically I won't do it the day of, because I think a lot of earnings is when you're going to be hit with significant volatility. Because for some companies, they can afford to be very vocal with their shareholders periodically, they can afford to talk to them continually, but for other companies, they just can't afford this luxury. And with ASML, they're a bigger company, so their CEO has a lot of important meetings, he has a lot of obligations, and that's something that he can't necessarily prioritize all the time. So you'll see a little bit of a spike here, whereas a company such as in our Microcap Mania portfolio, where the CEO has time to do a bunch of interviews on YouTube and he's not busy and running himself to death, you might get more advice from them, more input, more guidance, things of that nature. Now we're going to talk about some of the important changes that might actually be coming to quarterly earnings reports. This is something that the Trump administration has brought up now in multiple terms, and also some of the greatest investors of all time, such as Warren Buffett or even big CEOs like Jamie Dimon, have been in support of legislation that will actually get rid of quarterly earnings reports. Now, this is something when I originally was looking through, I got into the arguments and I really understood them, and I kind of liked the idea of getting rid of them. Now, I've later since changed my opinion, but I'll run through kind of the ideas on both sides of the aisle. So, on the side of the aisle for getting rid of quarterly earnings reports, a lot of companies, they put significant emphasis on beating these quarterly numbers. And that means they might slow hiring, that means they spend significant resources trying to actually perform well in these quarters instead of trying to have a more long-term focus. They might actually chase and prioritize the wrong things. They might try and take on accounting things that don't represent the company's situation the best, and it's really to try and prioritize. I mean, it's run by like the long-term investing crowd. It really is trying to prioritize returning to this long-term investing approach, and that's something that is like a key to me. I'm somebody who wants to see myself as a long-term investor. And so initially when I was looking through this, I was like, hey, this makes sense and I really like this, but it's something I've kind of changed my tune on a bit. You see, there's something about investing that I really like in that there are so many different ways to play the game. So, like, where I would never day trade and I would actively tell people not to day trade, I mean, just look at the statistics on it, I don't think it's in my right to try and support legislation that would potentially get rid of this access to information. And it really is getting rid of access to information. Like I already said, I have companies that they can, because they're smaller companies and they don't have to run as much, their CEO can hop on YouTube interviews and do a bunch of stuff, and I can hear from them like every 3 weeks, and that's awesome. And I love trying to invest in those types of companies. But when you get to these bigger companies, they can't afford to do that because they just have such time commitments elsewhere that they really, like, quarterly earnings is like, for some companies, the first time we're actually hearing from management since the last quarterly earnings. And if you want to talk about volatility and testing convictions, take quarterly earnings and make them twice a year. And that way you have to wait 6 months to find out if a company that you are invested in is committing fraud gets hit, or if a company is worried about something, or a market completely falls out, or there's something that completely implodes your thesis. You might have to wait up to 6 months in order to find that out, and then everybody's finding that out at once, and it's just going to have very, very big volatile swings. And I hate that. I really do hate that. I'm somebody who wants to prioritize having as much public information as possible, as frequently as possible, as at the end of the day, we are the people who own these companies. I mean, yes, a lot of the bigger companies, it's the institutions make up by far the largest percentage of the people who actually own the companies, and they have the most shares outstanding. But still, the people who own the shares, everyone combined, is the people who own these companies. And I like to have information readily available, because if for some reason, like I just went through the ASML earnings, but let's say that they had a competitor come onto the market and find out how to do EUV significantly more cost effective, better, and they were able to create machines that instead of $100 or $200 million per machine, they were like 50 million per machine, and it just ate their market share, just destroyed their market share. I'd much rather find that information out in 3 months than find that information out in 6 months, and find out when everybody's finding out, and I'm also competing with institutional investors who are then able to exit positions or open shorts significantly faster than I can get out of my positions. And again, I like transparency. I like looking through things, even though I think quarterly earnings reports aren't necessarily like the end all be all that a lot of people who have much, I don't want to say have much shorter time horizons, because some of them don't have much shorter time horizons. It's just they are so, I need to act, I need to act, I need to act, which again benefits the big guys when you do that. But I'm somebody who really wants to prioritize trying to help people learn about the benefits of compound interest, and you can't even get to compounding if you're in and out of positions every 3 months. But I still believe that we should have access to information in as short a time frame as possible, because these are publicly traded companies. People put their retirements into these, people put their lives into these. People even get stock options from their work, and those are the types of people who need information. Those are the types of people who need quarterly earnings. Even if I believe you shouldn't act on quarterly earnings, and I believe that there's going to be significant overreactions in quarterly earnings, we should have access to that information. So overall, thank you for letting me ramble a little bit about some legislation that might be passed. And again, that's like, I'm not trying to do that to be like political, oh, I don't think the Trump administration, because it's not even the Trump administration. You have, like, I consider myself a contrarian value investor, and I'm somebody who looks up to Warren Buffett a lot, and I can see the points he makes, and I can also see, yeah, but at this point in your career, Warren, you get information a lot faster and easier than the average person does. Like, let's just be honest. So, at the end of the day, thank you for letting me rant about some legislation, and I hope you guys got some value in what I look for in a quarterly earnings report. Again, just to reemphasize, it's not something that should be your this is the time to trade, this is the time to act now, like Wall Street kind of promotes it is as beating earnings, missing earnings. It should be a time to reevaluate your thesis and see if it still stands up. So overall, thank you very much for checking out today's video. I really appreciate your time.